Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. Our webinar title today is ESG Investing. Elevate your portfolio with sustainable strategies. So welcome, everybody. My name is Shane Chu. I'm the moderator for this webinar. Now, as you know, there's been a growing importance of ESG investing idea in the investing community, as nowadays a lot of funds they shun away with companies with really poor ESG rating. So if you do investment without ESG consideration, chances are you might chance into companies that may see their share price deteriorate because there are some funds who want to dispose the shares due to poor ESG adherence. So today we're going to assess what exactly is ESG and how do retail investors elevate our portfolio with sustainable strategies. As usual, disclaimer, whatever we share in this webinar is only for educational purpose. In no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decisions, you're 100% responsible for all your investment risk. Now, allow me to briefly introduce our speaker today. She is the co-founder of Global Hemisphere Group Sdn Bhd. She also served as the Vice President of ESG Association of Malaysia from 2022 to 2025. She is the fundraising chairperson for CSO SDG for the term 2023-2024. She's also a columnist for Pertubuhan Architect Malaysia Northern Chapter regarding the Green Initiative. She also sit in Penang Green Council as a working group committee towards Penang Green Agenda, specializing in green economy, governance, and institutions. She's also the speaker for SDG and Sustainability Framework in Malaysia SDG Summit, hosted by the Ministry of Finance and United Nations, Malaysia, Brunei, and Singapore in 2019. So she's none other than Miss Jolene Chai. So Jolene, how are you today?
Hi, Shane. Hi, everybody. Wow, today it's like hot, you can feel so passionate from the sun, where
All
we're going to
right.
discuss about the sun later on.
All right. So Sun also feels that. Okay. So without further ado, let me just hand over the control to you. So let's study about ESG. Okay.
Yep, thank you. Thank you, Shane. Yeah, please bear with me a while because I'm just trying to share my screen. Yeah. Okay, I believe that everyone can see my screen now. If you can see the screen, can you just say hello there so we can see that you're here with us? Yep. Okay, thank you, thank you, thank you. So today, let's discuss a little bit on as investor, what we should be looking at. Today we are more like sharing how we could look into it to actually help to analyze more on our portfolio. So I'm going to share a little bit on the changes of the landscape in the world. Actually, currently, we know we're facing a number of environmental issue, and also I think very urgently people are talking about climate change, especially I just came back from Cambodia like 2 days ago. It was like at 36 Celsius. So where the city I am now is 34 Celsius, so it's really hot. So these are something that we need to address urgently because it will lead to another problem, which is resources depletions. So when resources depletions happen, the resources market will shrink, and then it will cause a lot of ripples to different things, and this will actually affect those different sectors who are mainly in not only in services, it's all the supply chain. So first thing when we talk about raw material, a lot of people will start going to have a look on those company that they invested, which is more on the manufacturing. Yeah, that one is like a direct impact. But in fact, if you look through the whole supply chain, the one that are facing the most highest increase and paying the most for all will be in the service side because it goes to the end user directly. So that is why nowadays you could see a lot of people were talking about sustainable use of the resources, and they talk about how you can do circular economy. This kind of wording happen because environmental challenges is really like a big thing because it affect and change our lifestyle as well. Yeah. So let's move on a little bit. So how the global trends were started to have scarcity in the resource market. So like I said just now, what we will be facing is something like when the resources is having low supply, and then the demand goes up. So I'm showing you an overview how it will affect as a household and a business. So if you could see from the resource markets, it goes in and goes out in a way they go through governments, goods and service taxes, productive resources, money income payment. These are all from the business side. But from the household side, when we need this, we also pay into the government goods and services tax, and then we go into this productive resources. So it's like we buy raw material for ourselves to cook for our family, but this raw material may be processed by the business, and the business get it from the basic natural resources. So it is like a circle. So this is for you to understand further and understand more why the ecosystem happen and why the environmental is working the environmental is like affecting us so hard, and so many people is working so hard to understand how we could do better in this part. So as you understand the basic just now, then it is very easy for us to understand why it become a game changer for investor. So when ESG factors comes in, it actually transform a lot of the landscape, not only investment landscape, but it also transform supply chains landscape. And at times, in the past, we only think of what we invest in the company. What is the P ratio? What we can gain from here? What's the dividend? But we need to look into a long term, because as when the decision making does affect the supply chain, then this company may not position themselves well for a good success in their profit in future. Because when you need more money to exchange, I would say like more money to exchange whatever you need to push for your business, cost will increase, and then profit will definitely slightly go down, or even if you do not have that type of material to produce your stuff, and then you need to replace it. That is why, as you can see, we have this ESG scores where company will assess on their ESG risk. They have 14 different ESG themes, which you can undermine them more into 300 more detailed quantitative, but we are not going through that part. We just need to understand that it actually look into the social supply chains of environmental, the social, so on. So this is the part that you see where is the 14 ESG teams that help to guide the company to actually perform. So when you have this FTSE for good, okay, indexes, you could see how company perform and how is their ranking. Now, a lot of people had that misunderstanding that if they are doing good, they should be ranked there. No, it's actually when even you are doing good, you need to also reach certain profit. Recently I talked to one of our clients, then they was like, oh, I actually did all the sustainability thing and I score so high, but I was not listed in a FTSE for good. Then after that, because I never asked further why, I also want to know why. Then I only realized that because their profit wasn't at that required. You see, so if you do so many sustainable things, but your profit did not reach whatever your targeted is, then it is not a complete, I will not say complete, a more this is not a suitable framework for the company. So the company will not able to produce the expected dividend, the expected profit. But if they are listed in the FTSE for good, so you know that they are doing sustainable, you know that they understand and how they run the circular economy within themselves in their framework, and also they achieve the profit. This is the best that we want to look at it. Yeah. So that's why if you could see in the listing, that will be really good for you to understand more how the company will be working on. So at the back later on, we will share a little bit of case studies. Yeah. So this is part of how it goes into investor eyes. Yeah. Now, so when we say that it is a game changer, it comes to risk management. Actually, a lot of things when we invest in, it's about risk management. So traditionally, we always overlook hidden risk. So let's say I give some example which is more related to, maybe you can think about it. For example, back then, Titanic, okay, I like to use Titanic because when I say Titanic, everybody remember Jack and Roses. But what I'm trying to say is that Titanic do not have the proper risk management. That is the reason why, because they want to beautify the first class passenger to have a better view, they actually decrease their safety boats. That is the cost of 1,500 life lost, and they do not have a proper training on that. So traditional way, we tend to overlook certain hidden risks, but ESG can help. ESG factors can help you, not to say totally eliminate, but at least identify, and then we mitigate these kind of risks into our costing as well. Okay, I saw Q&A coming in just for a while. After I go through this slide, I'll answer the Q&A later on. So when it comes to the risk, when you talk about the risk in ESG, it will be putting into a different factors. For example, when we talk about environmental, this is so real right now because it happens to us, which is your climate change regulations. So, for example, the company we invest, okay, they export to EU, and we understand that EU will export to Europe, and EU is implementing the CBAM soon in 2026. If this company is not ready, then they may not get the first hand market when they're going. So everybody has to prepare. So if you could start seeing now, a lot of people asking how to do carbon, how to learn carbon, all these kind of things happen, right? Because regulation change. Regulation change reason of because of climate change. And understanding if do not addressing this climate issue, resources will become more lesser. And then all this will disrupt every operations. And the worst thing is we're so afraid when it hit the company's bottom line, delisted, then all our hard-earned investment will go into. Yep. So companies with strong ecological practices, they will be more prepared. So how do we know they are more well prepared? You can actually look into their sustainability reporting in their annual report, and then you also check them in the FTSE for Good ranking. This is one of the way lah. Later on, we'll also share on this. Okay, so when it comes to environmental, these are some of the risks and costing that may not been seen hidden. Yeah, because maybe like my grandmother times when they start doing business, how would they encounter and put carbon as part of their costing as well? If let's say today carbon tax happen, then this is like addition costing, hidden costing. Should we put in ourselves in the shoes to be ready for that? Yeah. So these are a few things that we need to have the manage on especially when it comes to costing, because it will affect the risk and opportunity that the company will make decision. So of course, social, we talk about labor, and the most important thing is bad labor practice will actually affect the whole supply chain. Imagine you have a lot of money, but nobody is working in that whole supply chain. Things doesn't move. So it will actually hurt a lot of reputation and profitability issue. So we give some example case study. So what happened during the pandemic? Some big companies declares themselves ESG compliance and ended up realizing that they did not comply on the social, and there has some how to say some noise, and then later on being exposed, and it actually affect badly to the company share. So last year there is also some I would say some petition signed for also for equality, get equal pay for women to sit in the board. So this kind of thing was happening not only in overseas, actually it's happening in Malaysia. It happens. So people walk on the street, talk about what they need, and these kind of things are all under social. And when these kind of things happen, if we not taken, the company did not taken care, didn't take care of this problem properly, then it will actually affect the whole supply chain. Then it will affect the quality, reputation. Then of course it will in the end have the profitability issue. So governance issue, we always say that corrupt, fraud, mismanage, all this thing. Actually, there is more than that. Governance is also how we look at the policy that we are setting on for our employees, our stakeholders, and also like all of us, if you invest in one of the company, we are also stakeholders. We want to know what is their policy that making them more transparent and more how to say in a way how they put their business into a proper SOP, and we can understand from where they are going on. It will actually lead to a win-win situation. When I say win-win situation is you achieve circular economy in the same time you achieve your profit. So this kind of practice, it actually reduce more risk than what we see in the social. Because if you could get your policies, make it in a way that it could help you to monitor in transparency, that will really help a lot. So how we know that the company has the transparency on their governance? Actually, you can go to their annual report, the page on they put on the corporate governance. You can look through what type of certification they are taking, and also what some company also really like taking ISO on like putting their company into a position that showing they have done this. But beware whether they renew it or not. Some people just take for the first time, then after that no more. They leave it. They just tell you that they did practice. That's it. So this is something good, because it can be keep on auditing the company as well. I mean, this is just one of the tools. There's other tools out there as well. Okay, so let's move on. Since we understand that this is one of the changer for an investor, we also want a long-term value creations. So actually, a lot of time people was asking, really, yeah, we prioritize sustainability, we can go more long-term. In fact, we understand that the natural resources is this much in this earth. Unless today we can fly to Mars to get this thing, or fly to other planet to get this thing. If not, whatever resources is here within this round planet. So which means what? It's limited. When the company does address this problem and understand that this is going to be a challenge, this will lead them into the first point, which is innovations. So go back to the old time, we use steam to move the ship, then we use steam to move the car, then we use the diesel, we use the petroleum, and then now we have EV. These are all innovation, because understanding that this kind of so-called resources will be also becoming more lesser. And also we understand that it might hurt the environment. And if we are innovative enough to change, then it could lead to a new business market. So if the company adopt this type of innovations when they look into long term, this will help to give them not only competitive edge, but a more how to say flexibility to understand how their product can shift. So a lot of people nowadays heard about sustainability, but in fact, that is a new way we talk about long term. So everything we do, we want to have a long term legacy. We want to have a long term profit. We want to have a long term income, recurring income. So we when we go to invest and we want to know what adoption have this company done, we need to look into how they shift. I love it when I study the history of it and how they change. And the best is how they fit forward, which means that some company, they always tell where we come from. But I always look at from here to the next 5 years, what are you going to do for your policy making so that you could actually be more resilient. You know that what type of adoption you need to do and what type of changing on the regulation out there. And bear in mind nowadays, consumer preferences is also making a lot of things more into quality, and also they want to know whether this thing is a safe and it would help the environment. Yeah. Okay, so these are a few things that we are looking into how the company could actually utilize their strength on their product. Okay, of course, brand reputation, this is a hot topic now. So, when you go into Google, you will always type, if we want to invest, who is the top ESG company compliance in this sector and that sector that we are going into it. Because when the company are more compliant, it gives us more, how to say, confidence to understand that, when we invest in this company, it actually have stronger credential, and also it can showcase the company value in a more transparent way. Because when we invest, we want to know what is happening out there, and we want to know what is the best of it. So these are a few things that we want to have to look at on the second terms, which is a long-term value creation. Yeah. Now, the third one, yeah, this is dollar and cents already lah. So aligning with investment with value. So a lot of people, they are looking into companies that share their own values. So for example, I have a friend, she only invests in those companies who are doing the CSR that she likes. And from there on, she go further to analyze it. So do bear in mind that ESG factors that helps you to align on what you want to do in your sustainable future. So some people, they invest, of course, for recurring income, but some people, they invest because the value is the same thing. And they want to have those committed company to bring up the commitment, so that when they are in this business line, they are doing the things that be how to say be in together, integrate with their daily value. So these are some of the products that are currently also doing sustainability, such as ETF, stocks, unit trust. So you can actually have a look into this, where you understand how much they charge, what is the management fee, and this will actually help you to understand more and allows more choices for you to invest before you put into one type of the product. Yeah. Okay. Now, so since we understand what company needs to do, now let's look into what is the global trends out there, which means outside what happened that will affect the ESG investing. So why I put the first one in there, we all know, right? So actually, political stability is very essential, and it is part of the S, which is the social. It affects a lot of things. It affects the governance, it affects the social, it affects the how to say environmental, but it affects very much when we can see it comes to social part, because whatever whatever announcement by the policy maker, it will help, it will actually affect the how to say the company's P&L. First thing. Then second thing, it will, when I say affecting P&L, including costing everything, because no matter what type of policy being announced, it is actually will be affecting company in either in a good way or a costly way. Yeah. But if political is unstable, then it will lead to a lot of uncertainty. So people will be start thinking that whether this kind of framework or this kind of how to say the policy of the country, would it be long term, or it's just a 5 years thing, or it's just like 3 years then it go off. So it actually affecting. So if you could see that those country with more stable political matters, they are growing very fast. It is true. For example, I have seen how Cambodia success in maintaining positive growth even during COVID, because their political environment is very stable. Yeah. So this is some example lah. But other country you can also study it yourself if you wish to. Then of course the second thing is the global trends of regulations. So what is happening now in the world? That is a very obvious one, which is you could see that carbon tax is coming in slowly into different countries. So will this be affecting our country? Will be affecting our investment, and also will be affecting the company that will invest it? The answer is yes, because it can be direct effect or indirect. So direct effect is like if our government implement the regulation. Indirect is because of they are part of the supply chain. Another one is direct is because they export to the country that need this kind of regulations. So are they ready? Because this is a global trend, you cannot run away. Yeah. And of course, you keep on hearing people say carbon credit, carbon credit. This kind of things is also like part of the regulation, but it's another topic that we can speak about it some other times because it's a big topic. And of course, market sentiment and investor behavior. When we talk about this, people wants to put their money into places that they want the most least market rumors. They don't want to have the price fluctuation so that their investment will not be stable. So market sentiment is so important in a way nowadays. Global trends, they are moving, because wherever you go nowadays, people will talk about safe haven. Yeah, people will talk about what can we do to make this place better, or that investment better. But this is all market sentiment. But will it affect? Yes, because you know rumors or speculative events will actually lead to some, either it's a good thing or either it will be damaging. So this is very much looking at how things are working on when the company release themselves and position themselves. Now, as we enter into 2024, we understand that technology is so advanced now. Even Samsung S24 can do direct translate on the phone. I also very impressed with it. But this is something showing us that the technology is becoming more convenient now. And big data analytics and artificial intelligence help us to do a lot of vast amounts of analysis. And bear in mind, although this data being analyzed by this kind of technology, but it also need us ourselves very much understand the business and to work on it. But these tools are coming in like nowhere, everywhere, because it wants to improve the life of the investor, make it more easier to be accessed. And also in the same time, when you do one click, okay, you want to know what is the performance, what is the 5 years performance, 3 year performance, 1 year performance. Technology and data analytics will help you to understand more. But this is a global trend, which means that if the company understand that this thing cannot be how to say run away, they would know that what type of data, what type of information they should be disclosed for the comfortable level of the investor. Yeah. Okay. Next, supply chain resilience. So COVID-19 pandemic is a very huge wake-up call for a lot of people because it shows us how vulnerable we are when it comes to the global supply chains. At first, it started in China, so everything they it's all right, it won't come to us. Then suddenly, it actually affect all how to say, not all in economic only, social, and then nobody, the plane cannot fly, you cannot go out, you cannot do anything. It's supposed to be more better, but we just realize how vulnerable our supply chain is, and it actually make a lot of company in make, how to say, do a very in-depth consideration on how they are going to reduce this kind of risk and what can they do if this come back again. So in fact, this is a good lesson to let us understand that if we keep on going to do this, what is going to happen in the end of the day. And also how this kind of so-called long-term supply chain that is going to sustain can reduce whatever disruption. So imagine today if I have another round of this is this company prepared for it? So we have to look into what is their supply chain mapping, how their roadmap goes on for that. And then it will help you to understand what if this company, they face this matter, can they overcome it? Because COVID-19 is just one part of it. What if it's like we got it like 2008, the subprime issue? So how they are going to deal with it? Yeah. So these are a few things that we need to look into it. Yep. Okay. Next. So I want to show you the sustainability regulator landscape. Now is impacting investor. So it's like everywhere. So if you could see, the earliest was started in California in 2010, where the Transparency in Supply Chains Act happened. And then for not that one, it's a EU taxonomy 2002. Then it goes all the way to the Supply Chain Act. And then now with the latest, if you could, of course, this is not the latest. The latest now is the CBAM for the EU, and also a few things that coming in along the way. But if you could see, it is very much a lot of act around the world is affecting how the ESG investing and ESG how to say compliance really affecting the company. Yep. So this is one of it that can show you that is happening all around the world. Huh? Yeah. So next one. So how does it affect us if we are in Bursa? We are investing in Bursa. So PLC, PLC, they are listed, and then Bursa ESG. I'm just putting this on here. Bursa put up whatever the requirement that need to move, at least the minimum. We cannot just jumpstart directly, but we need to start from the minimum. So they need to recognize themselves as a good ESG performance. So they need to fulfill at least these four things: fulfill the stakeholders' requirement, potential inclusion into this FTSE for good, improve their corporate profile, and also they want to access to sustainability linked financing. As you can see, bank nowadays, they also provide green finance, sustainability linked finance, all this around. I still remember that I just gave a talk like last August, but a lot of sustainability linked financing already came out within this half year of time. You see how this changes how these regulations changes and impact the company. If they are not ready, yeah, it will be giving a very big setback for them. So this transition is to actually help them to improve their scores and also help them to understand that their supply chain, especially I'm keep on highlighting that supply chain may be vulnerable, and find out how to actually make a change on that. Yeah. Okay. So let me look at the chart for a few questions. So is a cryptocurrency investing ESG compliant? Aha. This one is a very interesting topic. So I keep this in mind. Let me put down this question because we have a Q&A. Later I'm answering this because this is a very interesting question. Let me write it down first. Okay, got it. Okay, next. So when we talk about uh the global effect already, so come back to Malaysia. What is the local opportunities and also what is the challenges? So our opportunity is we are very diverse. We are not only in one sectors. We are famous in manufacturing. We are also good in agriculture. Of course, this kind of uh further exploration of opportunity in like automotive because we have our own own local car. Then palm oil tourism, Malaysia is the top 10 country to visit before pandemic. Yeah. And the one thing that we are proud of is Islamic finance, especially in Sharia compliance. We are the leader. We are actually in top five. So if you look into Sharia compliance, they are so much how to say aligned with the ESG. And you can look into it, especially as in financial sector, they are a growing sector. And then, of course, we talk about infrastructure development with a lot of investment from being brought in from China. And then, of course, we know about the Tesla thing. So we still have our opportunity in our local market. So these kind of sectors are still very have the space of to move on and extend. So this is a huge opportunity down here. But of course, we need to address our challenges. And the first challenges is very obvious. We could see that. And we hope that, it can actually bring more confidence to our investor with things getting better. Yeah. And skills gap. So I want to share a little bit on skills gap is because sometimes we do have the workforce, but those are really good or really professional and willing to invest to become professional, that that is very small portion. So we have of a human talent, but we lack of this type of skills. And of course, the first one affect the second one a lot. Yeah. So this is a thing that we need to look into it. And of course, we have faced a lot of criticism, especially recently on our airport. So when we look into environmental concerns, our ecological framework is still very how to say very baby steps. Um, we don't have risk mitigations for climate. We just only have some white paper, and recently they look into it. So this kind of things is something we need to address. That what is the local markets happening for the challenges? Yeah. So for that, we're going into the second part. And this part, we're going to share more on the strategies and also what is the overview on certain things, on certain things that you may wanted to look into it, and it can be tools for you to move on with your investing journey. Yeah. So there are ESG rating system out there. So these are a few that has been more, how to say, well-known being used. MSCI, FTSE for good, and then also S&P Global. These are a few that a lot of considerations that you can see. So of course, you can see this rating system, they don't happen today. They start from long time ago. So I just put some history for you to have a look here, that when it started, it actually but the proxy advisory, they purchased this ESG rating agency from ISP. After that, you can see S&P Global coming in. Then you have Moody's, MSCI, all these people, they want to they want to acquire this kind of agency is because they want the data. They want to showcase how company perform their profit and still achieve sustainability. Yeah. So this kind of system, this kind of rating systems, there are many out there. You could actually have a look on it, even you Google it. But a few that quite good that you can look at it is like MSCI and S&P Global. Yeah. Now, please, this is something that you need to consider. No single source of truth, because different rating agency, they use different unique method. So they may be a variation of score in different way. So when you want to look into the company scoring, my suggestion is to go 2 or 3 at least, so you can have the comparison of scores and understand where they're coming from. And then industry specifications, they are very significant across industry, which means that if this company in A sector, let's say manufacturing sector, they score very high, but they may not score high in another sector. So need to understand that we need to compare by industry. Yeah. And also focus on underlying data. Some data, when they put up, you need to know why they put that up. Yeah, they have some disclaimer out there. You can read at it. They also tell you the source, how they do on this scoring. So that is something that we need to understand it. If not, you will only see whatever it published on the paper, and then you will not know how they actually do the scoring. So every company has strengths and weaknesses. I'm not saying that they are listed on this scoring at a high score, which means they are very good or very bad. No, it is a way to help us to understand more about it, to help us to make more careful decisions when we do the investment. Yeah. But of course, you're welcome to understand more the company is doing. Actually, it's this all beyond ratings already. We need to understand how their company engagement moving. So let's say a company, they really go into a roadmap, they pledge what they say. Then the second year you go back and read the report. Did they do or not? So this kind of engagement also type of we want to look into it, because you can have a lot of strategy, but there's no progress. You can write a lot and very nice in the report, but the next year no progress. This is happening also. Okay. And you can also look into whether, like I said just now, does this company, their values, their mission, their vision, or whatever they are doing is aligned with what you want to do. Then for long term, does they want to commit not only in ESG, but did they want to commit in circular economy? Are they commit to be more innovative towards their products if the resources are being scaled down? So not just only current score. A lot of people say, this is good score, let's go. Then next year, third year, no review. Then it will be also something that we need to look into it. Yeah. Okay. Oh, so as some of research resources that are available for you, you can actually print screen this slide. From Bursa, it's very clear. You can go to Bursa for Good Bursa Index. You also can read the sustainability reports and also the listed company annual report. So what I usually do is I always read their sustainability report a year before I read this one, because I want to know that whether they are progressing or not, and then compare with their annual reports, especially on the financial part, and see whatever they commit, have it move on. Because sometimes some people put that in their first report, then second report has no progress, then third year no progress, fourth year no progress. So you may wonder what they're doing. Yeah. And also you can get more information in SC, Social Security Commission, and MOF. Yeah. So for global resources, of course, like Global Reporting Initiative, ISSB, UNSDG, but of course nowadays UNSDG is more on like government policy and also community based, but it still play a part when it comes to business. Yeah. So these are a few that resources can be available for you to do on your research. Yeah. And also the financial service providers, which is investment banks and brokerage, I think they have a lot of information that they could share as well, which you can easily get them. And then ESG rating agency that we shared just now. So the most important part is also the latest news and media update. So you see, like yesterday, I already fallen asleep, but everybody knows the Facebook and Instagram was down for, I think, 30 minutes. So you see how fast news and media actually spread. So we need to focus and stay informed for the latest development in those topics that publication had shared, especially when it related to the industry or sector that we invest on. And of course, a few financial news website that could coverage investing. So I believe a lot of people look into the Star. The Star have their, the ESG part, and also the Edge. Yeah. So if you want to be more paperless friendly, you can go to ESG Today, ESG Finance, this kind of website, which I usually go and have a look, and they talk about what is the current issue, and then it will how affecting what the whole global trends were moving, and it also will affect on how we invest in those sector. Yeah. So I take the liberty to actually combine certain thing and then put up in a very simple form for you to understand that some leaders and some laggards in the different sectors that is in Bursa, that is listed in Bursa. So to avoid anything, we don't put the company name. So I just put in, today I'm going to talk about three sectors. So the first one is energy sectors. So who are the leaders? The leaders are company investing in renewable energy sources. So RE has a lot. There's solar, biomass, hydro plants, okay? And then the second part you look into it is those with low carbon emission and energy efficient operations. So in their report, they will show you their base year and then they compare. Later we also will share some example. And of course, they must have OSHA, health and safety measurement in their place, because energy sectors is quite a high risk place to work at. So we need to look into their how they actually do the prevention for the OSHA, which is occupational health and safety measurement. So this, if something goes wrong in that, it will actually affect the share price. Yeah. So what is the legacy? Which is like they are still very reliant in fossil fuels and no transition plan. Okay. And no, like I said just now, you look at the first year, second year, third year, fourth year, the record is still the same. Very poor record on the environmental impact part. And also weak safety standards. So safety is very important when it comes to the energy sector. So these are the few points you can look, some idea for you when you want to look into their reports. Okay. Now we go to second sectors, technology sector. Choose the sectors that most people discussing. So how they do their data privacy and security measurement. This is the first thing. Okay, since you're technology, you can get all the information from the user. So how are you going to protect them? Yeah. And also how they innovate into a green technology and more efficient solution. Because they're already in technology. So by right, their emission, their emission is lower. But how are they going to be more innovated to make it a better solution? Okay. And also diversity and inclusion in workforce. As we know, technology is mostly will be dominated by male. So let's say if we have a very good female that is great in this part, does this company emphasize what they're going to do when it comes to diversity and inclusion in their workforce? So these are few things that you can look into it when it comes to the technology part sector on their SR. So companies involve privacy breaches and data misuse. This will be the thing that we look into it. And the very important part is coming on the last part is the diversity in the leadership, which is very limited, which means that you open up the book, everything is either one gender. Yeah. And then they do not have the commitment for renewable energy. Although we say solar, LED, all this easy access, but still not everyone will really look into it, because to them is a cost. They did not look into a long term. So when we read their reports, just see what is their renewable energy plans, whether they are going to commit or not. If not, what they do, the basic one, to actually at least reduce it. Because technology sector, especially data center, they use a lot of electricity. Yeah. Okay. Now the third sector, we talk about healthcare sector. So healthcare sectors, we look on like company whether they can produce more affordable and also more access to their products. Did they practice ethical when it comes to pharmaceutical practice and also their pricing and also how they do their research, which is involved into what is their medical research when it comes to global health challenges. Yeah. So back then when it was the COVID-19, you see like company like AZ, company like Pfizer, they go up so high. Yeah. But after you see now pandemics, I wouldn't say it's still pandemic. Now it's everything is over, settled down. We're starting fresh again. If those companies that not look into other healthcare assets, they are in a bigger trouble because who is going to take more booster now? Okay, I myself is fine with 3. Yeah. So unethical clinical trials or marketing practice, as we can always see, some people say that you take this medication, you can have this. You must make sure this disclaimer, right? Yeah. And also some excessive pricings that without justification, or the worst is how you dispose their manufacturer products. Did they have schedule waste? Did they have a proper way on eliminate all these disposal, especially in water, because water will go more faster than those static waste. Liquid waste is going more faster than static waste. This is something that we need to look into it. So from here, we talk about these 3 sector. This is something to help you when you come into, reading the sustainability reporting. You can also spot on these few things. Yeah. Okay. Of course, there are more sector to discuss, but today we have this very limited time. So that is the reason why we talk a few. Now, when we go for portfolio diversification, we always want to build balance because we understand that not all company they can do all the same. So they cannot all do the best and don't have any flaws or any mistake or any challenges. Yeah. So we need to look into that. So when you define yourself to do ESG investing, you must know your value. You must set an objective. So, for example, myself, I'm advocate for reducing carbon footprint. So I don't drive when I go to outstation. So if I were to invest, I want to invest in a company that they also produce promote reducing carbon footprint. These are things that we want to look into it. So I will be more favorable to invest in this kind of company. Yeah. And also, second part, we talk about diversification strategies. As just now we shared, there's a lot of funds. That is also mutual funds, exchange traded funds, other vehicles with a lot of different long-term principles. This kind of thing, you can also look into it. So some people, they do thematic investing. So they want to know whether there's clean energy because they can calculate any water conservations, any social impact, because all this can calculate with numbers instead of policy. Yeah, because when you say we adopt this policy, adopt that policy, but how do you measure the policy? That is a question. So some people, they love to have the numbers. So you can also consider that. And the third one, diversify across sectors. So when you invest, you don't invest only from one sector, invest in the sectors that considering how they can perform. So to me, I always identify who are the leaders in each sectors, study it, and look into their 3 or 5 years records, and then what is their fast forward, what is their feed forward, then we know which one we need to go for the investment. Yeah. So these are some tips to look into it. Now, we comes to the case study, the part. So we shared just now, how to look into the thing that in the sustainability reporting. So let's have a look on it. So the first one, all of these are disclaimer. First one, we look into Maybank. So if you could see, the one on the right side, which is carbon neutral positioning, if you could see, they have set their base year in 2019, even before pandemic. So this year, in 2022, they have successfully reduced 41% of their scope 1 and 2 emission. Of course, I didn't go into the details of it because they're still in other pages. So I will look at these and then I will go to their report that they published before and then compare to what they have now. So this one will be more helpful to know that whether they progressed. And then you look at their sustainable finance that they have mobilized. So compare in 2021, there's 13.68 billion and 2022 is 20.69 billion. So let's go back to look into their annual reports, there is always stated there. And then let's see, they talk about household lives improved. For 2021 is 500,000, 2022 is a 4. So a lot of people say, oh, usually it's a decrease, we don't have a low. No. Just go and understand why. Remember just now we said don't rely on just the ESG rating agency or any scoring platform. We want to more engage with the company that we invest in. And of course, sustainability hours achieved. So we got to understand how they do it. So it is more on significant UNSDG related outcome. So in 2021, they have more, 1.6 million, and then 2022, they have 1.5 million. So we want to know why they decrease. Is it something they have achieved? Sometimes they decrease is not because they're not good or they're not doing well. It's maybe they have increased and also they understand that they can do more, which is how to say, understand further and also knowing that they could do better even with lesser hours achieved. So it's very different. It's very different. We can also learn in different way. Okay. So let's look at the share price. Wow. So there's a big drop off here. We all know why. And then it moved up stably. Very stable. So I purposely change a little bit to today. So this is today at 2:35 p.m. Only this slide change. So you could see whether they tally or not. Because they tally, remember just now I said, if they found the right framework, I would not say a suitable framework for their movement, yes, then you can see growth. If not, it's not because they are not good now. Maybe they haven't found the most suitable one. Yeah. Okay. Or either worse, they are not doing it. Okay. Now, SMDB sustainability commitment. So this is their E part, this is their S part, and this is the G part, and also they tell you how they're doing it. So you could see the numbers here. They say increase solar energy generation to 2.8 million compared to 2022, which is only 986. Okay, so these are the numbers that you need to look back whether it's the same. Sometimes a lot of people say, oh, look at this, wow. So always look back, or you can know that what is their progress. Okay, these are their numbers because this is 2023. So we based on their comparison with 2022. So you see over 200 EV charging stations installed across Malaysia and Chinese mainland. So this is how they practice their sustainability. So you can also double check on that. So they tell you zero complaint of breaches of customer privacy and or loss of data. Okay, very simple. Go to Google and type Sam Debbie, any breaches or that. So you can see, because now news a day easy like Google, you don't need to go and buy all newspaper and one by one read it. Okay, so this kind of things is we kind of need to understand how it works. Then we know how to read the data. Okay, so again, everyone will see here dropping. Then you could see, does this company found the suitable framework for itself? The answer is yes. If you could see how it fluctuate, not too like this, and you also can study what is the PE ratio. Even if you look at the PE ratio, this is 12.43, this is 4.83. Despite the differences, they are also growing, but you see their PE ratio are different. Okay, but this one cannot compare in a way because they are in different sector. Again, different sector. Okay. Okay, Pharma. Okay, so this is they telling us what is their roadmap. This is what their goal. So this person is using this company is using UNSDG as their framework. So and it's nothing right or wrong because it's the same. Like just now we share about GRI, we share about ISSB, we share about UNSDG. So this is their framework, their roadmap. So they tell you what they want to achieve. They want to achieve within these 4 years is this 4 years is this, and this 4 years is this. But did you find something very interesting in here? There's no figure. There's no figure. So when there's no figure, when you want to look back, you want to know where I can find the figure. Yeah. So this kind of thing, then you need to go down a little bit to their report whether you see and find figure or not. The purpose I put it here, why the front two case study has figure, because if you have done the progress, there's always figure. Either the progress is not good or there's no progress, then figure is hard. So means what? Let's see the results. So we understand for the past 5 years, dropping 23.96%. So when you look at this, you understand the ESG, I would say sustainability commitment still need to improve. Because Pharma Niaga, we all know it's a pharmaceutical. Pharmaceutical requires a lot of resources. And when the resources getting lesser, you need higher price to buy. So if you are not innovative enough to come out certain thing, then you will stick like this. Yeah. So let's take this. These are all just case study. Not pinpointing any, just to show you only. Okay. So after you study all this, so later on you can go back and try a little bit on your SR, your sustainability reporting, on your company that you invest, you can have a look. If you're not investing yet, you still able to get a few. You can start with those good one, like banks are usually have to do, so it's a good one to go on. Also some in the IT, which is technology sector, you can go on. Healthcare, real estate, these few are more bigger names one, you can have a look on it. Now, when we talk about ESG investment vehicles, there are so many vehicles actually. So today I'm going to share a few. So the first one will be like Sukuk. Like I said, Sharia compliance is always very aligned with ESG. They are quite aligned already. That's why they become more and more a market and opportunity out there. So what's the benefit? They provide investor with an opportunity to generate competitive return while supporting sustainable development initiatives. Okay. So you can look for issuance by government agency or corporation specifically designed for a green project. Okay. Then some theme exchange traded funds. So they only track a specific theme, such as either they are in clean energy, then they are in clean energy. They are in sustainable infrastructure, they are sustainable infrastructure. Yeah. So what is the benefit? They offer instant diversification, and then they reduce you the need of an individual stock picking. And some of these theme ETFs, they were listed in Bursa Focus as well. So you can have a look on it. Yeah. And the third one is more on ESG focus unit trust. So these people, they manage fund that is based on ESG criteria only. Only ESG criteria. So they only choose the leaders across all sectors. Others don't have. Yeah. So you can see several asset management company, they does offer. So when they offer, you can read which one they pick, and then you can strategize also to put into it. Yeah. Of course, the most traditional way, which is individual ESG stocks, we choose the company based on our understanding how they practice their ESG, and also identify through your own research. So this one offer potential high return. If let's say the company you sangat suka lah, really think that they can perform. So and you do a lot of research on it. Yeah. But this one have a very huge challenges, which is you really need to do a lot in depth research, and you need to every day, I'll not say every day, but ongoing, you need to keep on monitoring them. So this is really a very huge challenge when it comes to individual pick. So I say individual ESG stock means you pick yourself. Okay. Now the last one is socially responsible investing funds. So SRI has been there for long, but not many people realizing it until people talk about it. It's like that. So when we talk about how hot is it now compared to 10 years ago. So nobody talk about that until we get very hot. So this one, they prioritize, different, they prioritize social impact. Just now we talked a lot about this how to say carbon emission, carbon footprint, because it is very obvious and it is very visible. But I also want to share with you this socially responsible investing fund. They are different because they focus on different things, social part. So like gender equality, reduce inequality, what is the labor practice. This one, it will helps you to align if your investment value is on social, and also they can also how to say give you some positive financial returns if let's say certain example like the policy say you need 30% female into the board, and this company may already have it, so they will grow faster in a way. Yeah. So you can also look for SRI funds that offers by various asset management company that they are listed in Bursa. Yeah, these are a few things you can look into it. Yep. So thank you very much. That's end for my sharing. Back to you, Shane.
Thank you so much, Jolene, for sharing with us ESG investing. So if you have
Mm.
any questions to ask our speaker today, you may write them in the Q&A box, not the chat box here. Write them at the Q&A box.
So can I answer the first one first?
Sure.
Because
I think
yeah,
just now you took down the question for cryptocurrency investing, right?
yes,
So the
yes,
question
yes.
is cryptocurrency ESG investing compliant? So that was the
Yes,
question.
yes,
So go
yes,
ahead, Jolene.
yes. So uh, when we talk about ESG, a lot of people also ask crypto. So let me share some of the view where a lot of people has been talking about. So when we talk about cryptocurrency, we talk about a few things. First is the value. Second is the governance part. So we don't talk about the environmental lah because it's already digital ma. So when we talk about the compliance part, sorry, governance part, because it is easy to to trace, it is there, and then you could see that it's easy, and it is shifting consensus now. Everybody is using, and some project out there already have ESG focused cryptocurrency. Okay. However, I need to let you know, because there's no regulated market and governance are various. Some government open up, some government no. So this is something that we really hope that there will be something for the consideration part when it comes to the social and governance. And so a lot of people say that since cryptocurrency on the phone, just trace like that, paper lesser. But did you know actually they are creating more carbon footprint because of their high energy consumption when it comes to the mining part, especially when they want to work the mining, like for Bitcoin, if you want to mine them, you need to have your electricity open most of the time. So this is something that really high consumption when it comes to energy. And this one will raise environmental issue. Yeah. And then also the last one I would say is that uh despite we have this kind of argument, there are still counter argument as well. They say that, oh, I can use renewable energy for this how to say to reduce the environmental impact. And because currently all the world now we want to move into more eco-friendly, which is we don't need to go to the physical space. we just need to use our phone to just do this and that. Easy. And then even though we trace with one place. So overall, traditional cryptocurrency investment may still not ESG compliance due to environment concerns, due to, like I say, unregulated market. Still, a lot of investors seeking for ESG compliant crypto option. So if you could have some research specifically for this project, definitely you will come. I would say that if you could go for GCR, they claim themselves they are the world's first ESG rating for cryptos. You can have a look on that. There will be more information about it. This is a good question because there's no yes or no, or there's not a yes or a no, but it is a good debate. It's a good debate. Yeah, I hope I answer your question. Yeah.
Thank you so much,
Mm,
Jolene, for shedding
mm,
some lights in this cryptocurrency
mm,
question.
mm.
The
So
next question is,
mm,
um, is ESG compliance only applicable to public listed companies? This is the question from
uh,
Chris.
Chris. So uh, to be to be honest to you now in the world currently, they don't say that you must do this, you must do that. Okay, you must be ESG compliance. But it's good to start first. So a lot of pre-IPO company and also how to say they are ready, but they not do not really publish yet. So they do internal. Some they are really doing internally, and then some are SME, they are doing due to only one reason. They are forced to because they are part of the supply chain. This is very realistic out there. And let me share with you what is the part that they really look into the compliance is the E part, which is carbon. Because as long you are part of the company that needed to declare their carbon or CPD, you are part of the supply chain. And when you are part of supply chain, it is better you start first. It didn't say that you are compliant. But in Malaysia, Bursa only for public listed. No regulation saying that non-public listed must do. But it is good for you to start. Yeah. Okay. Back to you, Shin.
All right. Thank you so much,
Mm,
Jolene.
mm,
So the next question is, just now you take examples of a few companies such as
mm,
Maybank. So the question here
mm.
is, do you have a case study for companies involved in steel?
Uh, Actually, I am doing one of the consultancy for the company in steel, but unfortunately, I cannot review here. But if you wish to discuss this further, and more privately, that I could do it lah. I'm sorry, Shane, this question I cannot answer at this now because I'm doing the research with them now. But
I
the answer
see.
is yes. The answer is yes. We have some case study, but this is because the second company only. So I don't have much in steel, but I have quite lot with IT and real estate. Yeah.
All right. Thanks so
Mm,
much, Jolene.
mm.
So the next question is by Ho. What would be your advice for early stage impact startups to call for investment while lacking resources to prepare for their ESG report?
Okay. So um, I would say that the first one, highlight your impact stories. So focus on your mission. You must very clearly tell what is your mission and how your mission address this issue. And then second part is quantify quantify your impact. So let's say, for example, your mission will lead to an impact. So you want to know what you want to reach on this impact. Then if you're able to quantify it, of course, it's more better. That let's say, for example, if you doing this because you are a waste reduction startup, then you can always mention amount of waste that you diverted from landfills or anything. Yeah. And transparency is the key. You must be transparent that your limitation, be upfront with your limitation, that you know what is your problem now, that you are unable, or maybe you have limited resources, limited research to build this report. Maybe this report is only 10 pages that up to your current startup, maybe because maybe you're only 3 months or 1 year. It's very much you couldn't write a lot. Yeah. So you highlight first step, you highlight first. Highlight what you want to achieve, highlight what is your limitation. Yeah. Then after that, showcase why you put this consideration into your business model. Simple way. No need to go very deep. Maybe you can talk about how you do your recycle, how you do your water waste management, or even like how do you save energy. Then who you partner with to align with your responsible practice. Okay. So then of course seek resources. What type of resources that you could go on? You can work with local government, local authority that align with your business. Showcase them that you are actually walking the talk. Yeah, walking the talk. And also focus on what is the outline of the whole plan. So let's say, for example, you want to move on this how to say your report, but because you don't have the figure yet. So if the figure is going to happen, when is it? Not now, because it is hard for you to share the figure yet. Yeah, you can always say that. So you will say that this is your whole simple report that to show you are actually committed. Yeah. Please don't try to greenwash your efforts. Just be honest, be transparent, and also the most important is because you may not know all the ESG principle, just genuinely choose the one you can commit. A lot of people say, oh, I want carbon credit. My goodness, carbon credit is so hard to do or not. Just say that reduce first, then we study from there, then we go. So your whole report is genuine, impact, and also you demonstrate. Yeah. I hope I answered the question. Back to you, Shin.
Yeah, thank you so much, Jolene.
Mm,
The next question is by Lim.
mm,
Could you share with us more about the carbon border adjustment mechanism in EU, as well
mm,
as its implication to the SMEs?
mm. So, just share a little bit lah. What is this CBAM first? CBAM actually is a carbon border adjustment mechanism. I think Shen has just shared the whole full name. So it actually put a price on the carbon emission and border in certain goods import into the EU. Okay, so this one they aim to actually import the goods with similar carbon costs to that they produce domestically lah. With they have this one EU emissions trading system. So why they want to do this CBAM? So we know what is it already. Now why? Why? Because they worry about carbon leakage. Because some company they shift production to country with uh less strengthened less strict I would say not so strict climate regulation so to avoid the how to say the pricing the carbon pricing. So actually CBM they discourage this. They come out is because they discourage this. They want the imported goods to pay for their the carbon emission they emitted so this one they can incentivize the producer outside the EU to adopt a better and cleaner technology to reduce the carbon footprint. So they want you to reduce your carbon footprint and still you remain competitive in EU market. Okay. So what is the current status now? As per today as per 2024 they are in a transitional phases because they start beginning in last year. And during this time, companies are required to report on your carbon emission on your specified goods that they are going to import to the EU. So the full enforcement for this potential financial charges they will kick off by 2026. At first it was said that by 2024, but of course Asian country, oh no, cannot do it yet. So what is the implications? They want to protect themselves of course the first thing, their EU business they want to protect their EU business to be disadvantaged by weaker carbon pricing in other countries. So currency differences and all this that will cost a lot of costing, which is different. Then for non-EU businesses, they want you when you export, you need to factor out what is your potential cost so that you won't be how to say increase your production cost, or they don't want you to how to say bring this costing into the EU. So they want to incentivize you if you use a cleaner production methods. And then if this happen, then they're gonna shift the whole global trade already, because the main thing here is cleaner production process. So they want you to remain competitive, but still they want you to commit into this. So this thing, some country, they may have challenges. They may have challenges. Some SME, I say SME lah, if they are not prepared, or some company they are not prepared, is really, really very tough for them, because they need to understand the situation that, yeah.
Yeah, if they don't adopt this, then maybe they may have to lose to the EU market, lose access to the EU
Yes,
market.
yes. So
So
in
so
a
long
way
that
lah,
their customers supply to EU market, they will ask, they'll make sure the entire supply chain
exactly,
to
exactly.
measure and calculate the carbon
Mm,
emission so that
mm.
they can present the report to their clients in the EU.
Also in a way lah, just now I actually use very soft word already, because they want to keep their own competition there lah.
I see.
Yeah,
All
yeah.
right.
Mm,
The next question is in regards to the plantation sector in Bursa. So in
mm,
general, how are the Bursa plantation doing so far as ESG is concerned?
mm.
Because the European Union doesn't seem to like the way we treat our forests.
Uh, okay. This is a good challenges. Okay. Now, they actually criticize us for how the way our palm oil production happen, and also our deforestation. So because they think that the way we do it, it will cause habitat losses and biodiversity decline. So the second one also, they also concerned about is a labor. I don't know why EU like to talk about labor, but it's good. They What they think is their concerns is exits regarding the labor exploitation. Um, if you know, back then in the 50s, 60s, 70s, some plantations, they actually use child labor, or even including like migrant worker treatment is very bad. Yeah, these kind of things happen. So this is the two main challenges that are always being challenged by EU: deforestation and labor practice. So what have been done for the efforts and improvement from the implementation sector is we have this round table on sustainability palm oil, and also Malaysian sustainable palm oil. They are now currently demonstrating a lot of good responsible practice, and they want the plantation companies to pursue these kind of certifications to ensure they are actually in doing whatever they need to do to improve it. So this is the first thing, certifications. The second thing is, again, later I'll share my view. Second thing is they pledge for reduced deforestation. So Malaysia actually pledged to reduce deforestations and improve the traceability of the supply chain, especially when it comes to palm oil. The the issue now is this kind of statement is still a statement, not really a whole SOP or whole not to say regulation, whole thing that you can see numbers yet. So this is some efforts. There are some efforts at least doing something. But when you come to talking about the investment considerations, then the plantation sector may face discount from some investor, because environmental and social concern issue. And also some company may have good practice, but some company does not have. This this sector is very, very how to say, special, because you wouldn't know the way how these people treat their plantation until you look into the place, and also the reports and also the so-called certifications by the Malaysia's Palm Oil Association, then only you can know. So this kind of efforts they are doing at least to me is still very policy making, but still not very aggressive. So this is something that we are lacking. Is still under the pressure to improve. The whole plantation sector is still under pressure to improve, particularly in environmental issue. So while these are still working on, then of course EU they will start telling you, this is my concern. Please show me more. So this is very crucial. Actually, this sector is very crucial when you talk about sustainable future. Yeah. I hope I answered the question. Back to
Yeah,
you.
thank you so much, Jolene. I think that's all the time we have for this webinar. I certainly think that it's a very interesting topic, and so we had an interesting discussion with Jolene today in regards to ESG investing. Hope that you have gained enormous value from this webinar. So let me just take over the slide control.
Yep.
All right. So ladies and gentlemen, you just heard from Miss Jolene Chai, who is a co-founder of Global Hemisphere Group Sdn Bhd. Thank you so much, Jolene.